Hi everyone. Good morning. Well, it's nice to be back at in-person events. 2 years of plus years of COVID and all my conferences were online. So it's nice to meet people face to face. Hi Jerry, hi Amor. I hope you get well soon and you have not contracted COVID. I would have loved to meet you here in person, but nonetheless. Let me set my phone for timer so I don't overshoot my time. This is a topic where we have so many aspects and so many things to cover, and I just have 45 minutes. So my aim today really is to not get into the details. There are enough experts who are going to speak on various facets in detail. But my aim is to, one, set the context for the subsequent speakers, and to give you an overview and hopefully a flavor of some emerging trends, global, regional, and why open banking matters for the Philippines. Why are we even spending our half a day here getting together? Why does it even matter? And as I was introduced, I won't go into too many details, but I wear many hats, and one of them perhaps, which is more relevant for all of us here today, or a couple of them. So I've been a policy advisor to many regulators and central banks from across the region and some even outside the region. So I have seen firsthand their thinking evolve in terms of open finance, and we've been hearing, and I have been based all over the world. I worked with Citibank for a large part of my career, including Singapore. So I have seen the mood and the flavor of regulators evolve since 2015-16. We've been hearing about open finance, open banking. To now. And I am also, one of the hats I wear is that of an academic, so I'm also a professor of Fintech at the Asian Institute of Management. I teach Fintech to the MBA and executive MBA students. So obviously open banking and open finance is something we deep dive into in detail. So let's try and set the context for today. And before I go into open banking, I thought, let me start by laying the foundational groundwork, as I would do typically as an academic as well. Let's understand how Fintech has evolved. And since I have spent almost all my career of 25 years in digital finance, digital banking, when I was in Citi, I was in digital engagement, digital transformation, digital marketing, etc. So I've seen this space evolve over the years. The first wave really was from immediately after the GFC, the global financial crisis, to maybe the first 5-6 years where the dominant theme, and I was back there on the other side like many of you did, the dominant theme was, hey, will we survive? Fintechs will kill the banks. And not in the traditional competition way, but the piranha approach, as we used to call it, death by 1,000 cuts. So hundreds or probably thousands of fintechs solving specific problem statements and use cases significantly better than the banks by offering a superior customer experience. So that was the first wave. It's okay, some digital disruption is part of course when we talk about digital disruption, right? So the second wave really was where we started talking about why do they need to compete when they can collaborate for mutual benefit. And that really became the emerging and then subsequently the dominant. I would say it started in 2015-16, depending on the geography and the maturity of the market. Collaboration just makes sense. I won't go into details, I'm sure all of us are seniors just so we understand. But the challenge really was how to operationalize and scale such partnerships. Statements of intents are fine, innovation labs are fine, making nice press releases and PR statements is fine, but how do you really scale it up when the rubber meets the road, right? And we are talking about proprietary systems which were not designed for an open era. So how do you move from competition to collaboration? And that's where I believe the third wave, which we call as the open bank or the open finance wave, started, and now it's really entering a stage of maturity or growth, which really focuses on the ecosystem approach, not banks, not fintechs, not tech fins, not the regulator as independent entities, but part of a larger ecosystem. And the important thing is to remove friction in operationalizing this partnership. Of course, the focus, as bankers or as tech companies, we all talk ad nauseum about customer centricity, but how do you bring that customer centricity to life and not just as a vision or a mission statement? So I think now that we've understood the context of how open banking has evolved, let's look at the forces which are shaping it. And I always like to ask these questions of why, what, how. So what is it driven by? And I call it the keys framework. I think we all understand that customers want keys, but in this context, E stands for extensive network. And for many of us, including me, I ran the payments businesses for Citi in many countries. The challenge always was that you can only terminalize so many merchants in a profitable manner, right? So how do you go from limited networks to extensive networks, from POS, BDC terminals to something like QR codes, for example, a radical innovation. A is, of course, ambient transactions, and we've seen it with the emergence of ride-share platforms, or now even with Alibaba or Amazon Go, etc., where the payment or the banking transaction starts happening increasingly in the background, right? Like if some of you took Grab today, you booked your Grab, got in, got out, right? So it's not that the payment did not happen. Obviously, the payment happened, but it was machine to machine at the back end, which I'm sure many of the tech experts here will talk about afterwards. So ambient, and I like to call it banking everywhere, but the bank is somewhere. The S is, of course, speed, and we've seen it happen in country after country, including the Philippines, where the PSD first started with an NRPS framework and then launched InstaPay. So you don't have to wait end of day or even back settlement. It's real-time payments. We've seen it with PayNow in Singapore, PromptPay, Thailand, and many others. UPI in India. And the E, of course, stands for ease of transaction. Removing friction from the transaction, whether it is contactless, NFC, or any such kind of transaction. The other factor, the customers obviously want ease, but there is a specific emergence of a type of customer, which I think we all broadly acknowledge and understand, but again, putting a framework to it, I like to call it the solo customer, or the social, local, and mobile customer. I don't need to go into details because again, we all understand that mobile is now pretty much the last mile for any kind of solution. Even banks, fintechs, everything happens primarily on the mobile app. Social was pioneered by the likes of Venmo in USA, and then in a way, Gcash is doing that, or Maya are doing that here in the Philippines quite effectively. Then PayNow in Singapore. Why do we need to have complicated details of bank account numbers, etc.? If you can text, why can't you send money and do transactions with text? And that's how Venmo was born in the USA, and that's how this has become a big thing. So replicating the social behavior, since we are all so much into social media these days, in fact, some may argue that we are more real in the social world than real in the real world. So that's the low part of it. Sorry, the so part of it. And the low, of course, as we discussed, is an innovation like QR codes, for example, which really has become ubiquitous in not just China, but pretty much in our region in Southeast Asia. If you go to any mall in the Philippines, in Manila as well, you will see a multitude of 10 cards with QR codes, and now the PSD is coming with QR codes as well. So how do you make it hyper-local? So this is not something perhaps that banks or the supply side of the equation did it purely voluntarily. This is in response to changing user behavior, especially the millennials on one hand, and we know that there is a large opportunity in the unbanked or the underbanked segment in a country like the Philippines, or I may say the entire ASEAN. So that is one part of it. I call it the bottom-up force. Then there is, of course, the top-down thing which we've heard mentioned in Jenny's opening about the PSD. And I won't go into detail because we don't have time. But this is just to give you a flavor that across Asia, across ASEAN, regulators have been a big driver of this change in digital finance, culminating in or resulting in open banking and open finance. And if we just zoom in on the Philippines, we've been hearing since the last administration about the focus on infrastructure or financial infrastructure, which resulted in NRPS, etc., and now the whole race for InstaPay. or desolate. Then I briefly spoke about QRPH as well. How do you standardize it to create national standards, not just payment system or systems, but a national common standard. And this is something I have discussed extensively. I've had the pleasure of discussing it with the seniors from the BSP as well, and in other countries. Even Bank of Thailand has a similar version called ProudPay and QR Thailand. Then even innovation or driving innovation through new policies and licenses, like we know that 6 virtual banks have been licensed in the Philippines, and many of them are going live this year, which is one of the highest number in Asia, compliments to the BSP on that, and a very well thought out and well structured policy approach, not rushing into it, not being over conservative, but not being very aggressive as well. And similarly, from the virtual asset side or the crypto side, the last license framework, the virtual asset service provider framework. So there's a lot which is happening. And then, of course, we saw the release of the open finance framework by the BSP as well. So if you have to put it in context, there is the top-down powered by the regulators, there's the bottom-up powered by customers. When you see the confluence of these two forces, you realize why open banking is not just here to stay, but the banking of the future. So let's take a quick look. I don't really need to explain it to this kind of an audience, but again, to put context and put some structure into it. What is open banking and what are the key forces? If you had to put a structure, the why, where, models, and how we are evolving from open banking to an open finance vision. The why is essentially, as I said, if you have to move to a more seamless collaboration between banks and fintechs, then you have to have a structure, a framework, a tech architecture which facilitates it, rather than it just being limited to pilots and POCs and never seeing the light of the day after that. Greater choices, better user experience. We understand this. The more choices you give to users, the better it is for them. Many of us probably understand this or are aware of the history, so it really got a formal shape and structure in the European Union with the launch of the Payment Service Directive, PSD, and then PSD2 in the EU. And this essentially was an open and transferable sharing, portable sharing of data through open APIs and then EU-wide passporting, which of course, unfortunately, we still are not there in ASEAN, but could be a good roadmap for policymakers. The model really, as I see it, and having been and spent 2 decades on the other side as a digital banker, when you are in banking, or at least when you were in banking, the model was you wanted to be a financial supermarket, right? Bigger the bank, the more products or services you wanted to have. And the whole orientation was based on lines of businesses. So the bank wanted to be a supermarket. But now we are moving away from that mindset to a marketplace model, or a mall model, whatever you want to call it. And therefore, instead of a line of business, revenue and profit kind of a structure, you have to think in terms of customer life cycle, customer deepening, share of wallet, long-term relationship, lifetime value of customer, all the good metrics that fintech companies are better at rather than banks. So it's a mindset shift as well, as we heard Jenny talk about it briefly. It's not just about technology. Transformation is always about people and mindset as well. And finally, we are moving to an ecosystem where it's not going to be the banks alone at the center, but an entire, as I said, a financial supermarket or an ecosystem. And the bank's role will, in my view, evolve, refine, even redefine, to being perhaps something like a platform or a service or a utility provider. One may agree or disagree, but that's my take as how I've seen this space evolve. So in some context and history, I always like to go into history to understand what the future may hold in store. As we say, history may not repeat, but it certainly rhymes and it offers us clues, especially for folks like me or some of you who've seen this space evolve in the mid-90s with the advent of the internet. So I try and take some clues. So Web 1.0 in the mid-90s, Web 2.0 in the mid-2000s to now. Essentially, this whole idea started with what we call as the platform economy or the platformization of the industry, where instead of a fixed producer and seller, and a fixed fuel buyer or consumer, you are seeing a scenario where producers, consumers, providers, and owners all come together in a common ecosystem. And the simplest model that we are all very familiar with and we understand is the iOS marketplace and how that led to the boom of Apple or the Android marketplace or what Facebook tried to do. And it's become more and more of a common model now that there is the marketplace provider, there are producers, and there are consumers. In many cases, they intersect with each other. Think of Facebook, for example, or think of YouTube. We watch videos over there, many of us also post videos over there. So, are you a producer? Are you a consumer? I like to use the term prosumer. And again, needless to say, it has been one of the biggest revolutions in the internet space. Web 2.0 has led to a growth of a whole new generation of companies, unicorns, giants, and companies which are well embedded into our lives. I gave the example about Grab, and that's just one example. Ride sharing, Uber, etc. You look at it, or Airbnb, or we work in space sharing, or professional services, freelance marketplaces. In virtually every industry, the platform economy has become the dominant economy. The old world economy or the old internet economy has either reinvented itself, like Apple has moved from a device producer to a marketplace model, and all the others have started becoming redundant. I spoke about this. You may like to call it banking as a service, banking as a platform, or banking as a utility, whatever catches your fancy or whatever you are worried if you're a banker. And just to super simplify this slightly busy looking slide, I don't know if there's a, so if you see this is the bank in the middle in an ecosystem. And we know that the bank has its core banking systems, which were often created in the 70s and 80s for a very different era, set of customers at a very different time. So you have your banking license, your banking core banking system, CRM system, card system, loan system, compliance system, CRM system, and so on and so forth. And then you have an API layer on top, which many banks have already gone in that direction. And then you have enabled access to a host of these fintechs, which can come and work with you in a more frictionless manner, faster, cheaper, easier, built on these three key principles. And the key word here again is open, right? Open standards API, open data, and in many cases, open source software as well. Well, I know it's easier said than done. Perhaps it's more ideal, a statement of idealism, but these are really the three key principles if you had to distill open banking on what it is. So, customers obviously get more choices because they don't have to depend on the supermarket's products alone. Now they get a choice from the marketplace, and the bank is able to open its customer base to a whole host of fintechs. So instead of competition, you move to cooperation or collaboration, but in a manner which is more viable and scalable. So let's look at some global and regional trends now that we understand why open banking even matters. Globally, it's growing by about 8 to 10% depending on which data set you look at. Approximately 15 banking platforms have APIs enabled, which is a large fraction of the banks in the world. Again, these data points you may agree or disagree, but the fact is many leading banks, you look at DBS, you look at JP Morgan, Citi, all the global and regional leaders, or even Union Bank here, many banks have their API portals that you can go to and see a suite of APIs for developers. As always, because of the very nature of how it was constructed, Europe leads, but APAC is fast catching up. So the center of action is very much moving to our region. And within APAC, we can see you have countries like Singapore, Indonesia, Philippines. So our region is certainly planting the flag. And then a key interesting example that I like to often quote is that of India and how the UPI stack has really transformed the payment landscape. So again, trying to learn from various markets and various models. So these are some of the leading API products which are either offered by banks or which are used by fintechs, and I'm sure our other experts will talk in more detail about this. but to set the context. Either, mandated banking requirements like identity verification or KYC, etc. Then, of course, the most obvious use case is payments. We've been seeing this for years. In fact, about 25 years back when I started my banking career with Citi, payments was one of the first APIs when we launched the payment gateway. Loyalty rewards, data services, and now increasingly credit data and credit services. I spoke about UPI, and unfortunately I don't have time to go into details, but that really was a stack which was an excellent example of a public-private partnership facilitated by the two regulators, Reserve Bank of India and the NPCI, or the National Payments Corporation of India. And they created a full tech stack, right from identity validation to the biometric ID, to how the payments were done, real time, and at zero cost to the user. And then they brought in all these private sector players. So you name them: Amazon Pay, Google Pay, all these leading international players, as well as Paytm, BharatPe, etc. They're all part. And we've seen the results of how fast and how rapidly it has scaled and it has changed the landscape. And you will find a similar model with Thailand as well with PromptPay. So again, there are success stories in our region as well. This is not just an idea or a concept anymore. This has become a reality in many markets, and a reality which is fundamentally changing the landscape. So again, when we see examples, when we see numbers, it comes to life for us. This again is, I spoke about India stack. I don't have time to go into detail, but we call it JAM, or Jan Dhan, which is the mass bank accounts. Aadhaar, which is the biometric ID, and we now have a biometric ID in the Philippines as well, which is being rolled out. And of course, the M stands for mobile, as you've seen in the Sorobo thing. And UPI, along with other innovations like RuPay, etc., have transformed the landscape. Now, there are critiques of that as well. I won't go into details about whether it should create national payment systems or you should allow international open systems. That's for another time. But this is a quantum leap in digital payments, digital transactions. So now, having seen global and regional models, let's zoom into our very own beloved Philippines. As I said, with the infrastructure approach, many foundational elements have already been laid. So it's not that we are at a point where we are just ideating. NRPS is already in place. InstaPay is being used extensively by many of us, or perhaps most of us. QRPH was supposed to go live, and hoping it's already gone live, or will go live soon. I spoke about the vast virtual banking licenses as well, and many virtual banks will go live this year. Some of them have. So what are the next steps? And this is really the circular that many of us have perhaps read, or if not, I would encourage all of you to go and at least type on it, so you'll understand what the objectives are and why the PSP, like many other regulators, has gone down this path. We all understand it intuitively, but again, putting a structure and a framework, what are the benefits of open finance, not just for banks, because we are all gathered here of our technology partners, but for the entire ecosystem. And I would say there are, for society as a whole, there is a significant benefit in terms of economic and financial inclusion, which is one of the primary agendas of not just the PSP, but pretty much most regulators in our region, or in Latin or Africa. When you talk about the economy, when you create an open stack here like UPI in India, for example, you eliminate duplications and a lot of wastage which goes, and what is the process today? You want to open an account with one bank, same set of KYC, same set of documents. Another bank, same thing. A wallet, same thing. Government services, same thing. There is inherent wastage in the system which open finance and hopefully an open economy can eliminate or at least reduce in due course. So there is a very clear economic benefit to society and the overall economy. Customers, of course, who doesn't like greater choices and who doesn't like faster, cheaper, easier, and more transparent, right? So you are suddenly, now it's no longer just a pipe dream or something to say. Customers not only have access to it, but they are now used to it. So there's no going back. If you're a banker, this is what it is. And then comes the big question, so what's next for the banks? Fintechs, we understand, they get access to banks and they get a more frictionless collaboration, which was earlier happening, how they were able to partner with banks. And of course, innovation. So embedded finance, and now, as I said, after UPI, India has also launched ONDC, Open Network for Digital Collaboration. So they are trying to create a similar platform, the entire digital ecosystem. So you can ideally move to that point as well. But what's in it for banks? Why should they open their treasure trove of data that they have so assiduously gathered for years and decades for fintechs to come and take the benefit? One, as I said, it's bottom up. Customers are demanding it, they want more choices, they're used to this sort of way of working. Two, regulators are taking a proactive stance. Three, as I keep telling to all my banking friends who will listen, either self-cannibalize and be ahead of the curve, or get cannibalized and wait for it. It's a simple choice. It's unfortunately a simple binary choice. Either you can wait to get generated and disintermediated, or you can take the, as we used to study in B-school, the Intel approach, self-cannibalize and go to the next level already. And there are opportunities, you can have many more. As a bank, you can probably have 10 or 20 products. With a marketplace, you can probably offer 100 products. So there is opportunity for you as well. And in the case of the Philippines, it's driven by national objectives, as we discussed. 60% of our Filipino adults are still unbanked or underbanked or excluded from the mainstream system. So, from a supply side perspective, these variables of interoperable standards, interoperability, not proprietary wallets, not proprietary QR, responsible innovation. So, how do you foster innovation such that the systemic stability does not get threatened, but you also don't throttle innovation very early on? Healthy co-opetition, Jenny also used this word, and ensuring systemic stability. So this is one of the objectives of the PSD as a regulator from a supply side equation. From a demand side, as I said, it's faster, cheaper, easier. We saw the ease framework, greater choices, lower cost, and customer consent. So suddenly customer not only gets more choices and lower costs, customer also gets more power and sovereignty over her or his data and what he holds with the bank. So inclusion is not just one thing. Again, I've spoken at many inclusion conferences, and I have discussed and debated this ad nauseam, friends from World Bank or APAC or IMF, etc. Many schools of thought here. But my own view is it's a continuum. So we've seen examples of M-Pesa in Kenya, then going to contactless payments, QR codes now, and moving to national QR code standards. This is when I had invited the deputy governor of the PSD to one of my classes at my last cohort. This is what he had presented. This is their vision and the roadmap for why they want to go for a national QR framework, QRPH, and broad timeline. So you can see convenient, affordable, speedy, reliable, benefits for businesses as well, not just consumers. And we know that a large part of our economy is driven by MSMEs. So let's look at opportunities and challenges. It's not all bed of roses. We understand that no transformation is ever a straight line, seamless or easy. Opportunities, of course, are greater customer choices, potential new business models for banks if you're open-minded, user data sovereignty. Fintechs can now expand at scale without having to spend millions of dollars in buying customers or fighting for customer real estate, and financial inclusion. Challenges, of course, you have to literally go back to the drawing board if you're a banker. Literally sit with your CFO, CEO, CTO, and redefine the entire business model. It no longer works in the traditional kind of business model. You have to really think differently in terms of different metrics, customer revenue, lifestyle, lifetime value, and so on and so forth. The other problem that I have repeatedly seen, even from my own days to now, having seen and spoken at so many conferences and interacted with so many industry leaders, it's still a very tech-driven initiative. And it's great, I don't have anything against that. but it has at some point to evolve from a tech initiative to a business initiative because you cannot operationalize it at scale. Like it or loathe it, but even today, the business models are, or the business revenues are owned by the business heads, lines of businesses. So you have to bring business into it, and ideally right from the beginning. Data governance, data privacy continues to be a challenge. We've heard about it, and I'm sure other speakers will talk about it. APIs are there, but again, you can't really create an ecosystem with proprietary standards. There have to be open standards, and you can't expect the BSP to come up with that every time. Like in the case of Singapore, some of you might have heard of this platform called APAC, API Exchange, which is a public-private partnership. So I think that's the way forward. And supply side has to effectively meet the demand side. You can create as many players as you want, but guess what? If customers are not using it, right. So I'll spend the last 5 odd minutes just going through the data part of it. I know it will be covered in a lot more detail, but I thought it's important because I said those 3 opens, right? Open APIs, open source software, and open data. And perhaps this is the most controversial, the most challenging, and also where the regulators are most concerned, but also where the most opportunities are in life. So it's not just about data governance or data protection or data privacy anymore. I believe we have to evolve, and in Europe, etc., we're already seeing signs of this. You're moving from data governance to data protection and privacy to the very idea of data sovereignty. I know Philippines is still some way away from that, but that has to be our vision statement. And I have been often asked at conferences or otherwise, on what are the problems. I was at a panel on open banking about 3 weeks back at the Global Fintech Festival in India. And in the panel I was asked, Malik, what do you think are the challenges of data governance with banks, with organizations, and which hinders the growth of open banking? And I said, rather than talking negatives on what are the challenges, let's look at what are the best practices. Let's give a positive spin. So again, wearing my academic hat, the 7 pillars that I've created, I call them the 7 E's of a robust data governance framework. I won't go into details because I'm sure many of us understand, and our other expert speakers will talk about it. But essentially, your platform has to create a single source of truth, whether it's how you architect your enterprise data warehouse, how you align your various data streams, not at a business level, but your platform has to be consistent at an organization level. To achieve that, the second P, processes. How do you manage your metadata? How do you have consistency in data labels, especially if you're a multi-organized, multi-business, even a multi-geography business, data taxonomy, etc. And how do you continuously ensure that your data is up to date, both in terms of data quality and how do you enhance it? Third, of course, is people. None of this is going to happen without the right people in the right people orientation, alignment, and culture, right? So governance structure. Who is your data owner? Who are the users? What's the engagement model getting there? What is the communication model? What if there's a data hack? What is your internal and external communication strategy? Fourth is prioritization, the fourth P. Just because you have a data platform and a data warehouse and you have very good data governance management practices, don't keep sending out 1 email a day to users or 1 text a day. That's bad prioritization. Prioritize what you need to communicate to customers, how to get the best bang for the buck. Data is a resource like any other, use it judiciously. What are the optimal customer touch points? The fifth is policies. You have to create the right policy frameworks and standards which take into account not just what the PSP is saying, but also your internal processes and practices, and it aligns your taxonomies. The sixth, as we've discussed, is data privacy. Compliance with all the best practices and certifications like PCI DSS. If you are servicing clients in Europe, then GDPR, Global Data Privacy Regulation, country PDPS, Personal Data Privacy Acts. In some cases, regulators insist on data localization in country. How do you ensure all of that? And the seventh is protection and safety. Protection, data protection, not just data privacy, but how do you manage it well? How do you keep it safe, especially when you are enabling it across so many partners with APIs, right? It's one thing to say APIs are enabled, I'll give you customer data. How do you ensure data safety and protection, especially when you want to work with external partners? So I conclude my presentation. Hopefully it wasn't too heavy when you got some pointers and piqued your thinking. With key success factors that I see it, if we have to move beyond where we are to really go to the point where Europe has been. The first, of course, is, as I said, open data has to meet open data governance. I have already shared a framework that if you like, you can use, feel free to use it. And there has to be consent-driven data portability. That's what data sovereignty is all about. Open standards API, we discussed this, national and regional standards, and I'm glad to share that it's not just QRPH anymore. I was speaking at a conference back in 2019 organized by the Central Bank of Thailand in Bangkok, where it was announced that the central banks of our ASEAN region want to collaborate on creating a regional standard. And now that is becoming increasingly a reality. Or other projects which are not exactly in the domain of open banking, but multiple CBDC projects driven by BIS, etc., BIS Innovation Hub. So interoperability, but not just national standard. Ideally, if you talk about one ASEAN, can you create an ASEAN level standard? And how can you create a developer ecosystem that is as friendly and as compelling? We talk about iOS marketplace all the time, but iOS works because there are hundreds of thousands of developers and they have an economic incentive. They want to reach out to those customers. How can you ensure that? A microservices architecture, which I'm sure our other speakers will talk about when they present, your cloud compatibility, your DevOps capabilities. And finally, I can't emphasize this enough. It's not just enough to have it as a tech project or a tech deployment. This has to become a commercial deployment at scale in your business. That calls for a business model revamp, going from a supermarket to a marketplace model, and a complete change of mindset from being an island to not only being open, but welcoming to working with external partners, people, tech things, even industry association and organization. So with that, I come to the end of my presentation. Hopefully this establishes a segue into the subsequent speakers who will go into these things in more detail. Thank you and have a great rest of the day.